All right, welcome back. We are still in the thick of earnings season, and we are going to talk about Google today. We are looking at the weekly chart of Google, and if you've noticed, I've changed my charts from black to white, just changing things up here. So we're looking at the weekly chart, and you can see here a nice uptrend on Google. Nice long-term, steady grower here. Nothing wrong with this chart at all. And we don't get a lot of pullbacks in this company. And one of the more recent pullbacks that we did get was recently here. And this had to do with some of the antitrust DOJ lawsuits. I've made videos on that before. You can check that out. This is a stock that is in my portfolio. It is just below NVIDIA and the percentage that I own it. So it's a bigger position for me. And this was something I was very curious to see how the earnings were, because a lot of this sell-off here had nothing to do with the earnings. It just had to do with some of the antitrust. This is a phenomenal business, as you'll see in just a moment. And I thought this was a great buying opportunity. There's still going to be that overhang of the antitrust. That's why its valuation is a lot lower than some of its peers, because we don't know if it's going to get broken up or what the resolution is going to be here. But regardless, this is a great business. So let's get into the quarter 3 earnings. We've got this nice graphic here you can see from this past quarter. So Google, $83 billion in revenue. That is 15% year over year for this quarter. Most of that is going to be in search advertising. That's $50 billion. YouTube is around $9 billion, up 12% year over year. You've got Google Play, and the cloud here is the big winner. So the cloud is at $11.5 billion. That is up 35% year over year. And all of this equals a net profit of $26 billion. So Google's making around $100 billion in net profit a year. Outstanding. So nothing not to like here. A lot of good stuff. So revenue growth up 15%. I already mentioned that. It was a $2 billion beat on the expected revenue this quarter, which is great. Advertising, $66 billion. It is down a little bit from the last quarter, but still awesome. YouTube up again. Mentioned that. Search is up 12%. Subscriptions, platforms, and devices, that is up 28% to almost $11 billion. Again, the cloud, the big winner. Gross margin of 60%. Phenomenal. Operating margin of 32%. Cash flow, operating cash flow was $30 billion. Just crazy. Free cash flow of $17.5 billion. People give Google a lot of crap for being spending a lot on some weird stuff when it comes to employees, like meals, and have timeouts and sleep pods and all this stuff. When you have this much cash, I guess that's where that comes from. You can have an employee taking a nap for a week because you just got so much cash you don't know what to do with it. Long-term debt is only $13 billion, and their cash and marketable securities of $111 billion on their balance sheet. So just a phenomenal business in phenomenal shape, and not really anything to poke at here this quarter. So when we look at the highlights, again, revenue growth accelerating. So they're still a growing company. When you see a company this size, you don't expect it to continue to grow, and a lot of that is going to be the cloud, which is up again 35% year over year, beating expectations of 29%. Again, AI, really, really good. So AI and cost efficiency. I did see something that a lot of their code, about 25% of their code, is being written with AI. So again, that is 25% less salaries that they potentially have to pay. Or on the flip side of that, maybe it's not less salaries they pay, it's just more output from their current workforce. So if you're a coder and you have AI now, you're a super coder. So stuff like that's going to get really interesting over these next few years, how much more efficient people can get. So YouTube growth looking really good there as well. 12% increase year over year. We talked about that. You've got the subscription services, YouTube TV, YouTube Premium. What did I do there? And then you've got the Sunday Ticket. Looks like that was a nice addition for them as well. 50 billion and counting for the ad revenue there. New partnerships, new clean energy investments. So that's some nuclear reactors. All the big tech companies are looking at that. We'll see if that can actually produce electricity for them. They are partnering with these companies with the promise of, if you can pass the regulation, make this stuff work, and do it at this price point, then we'll write you the check. So it's not like they're getting nuclear power right now. It's the potential down the road, if these companies do X, Y, and Z, that they could get some of their electricity from nuclear power. Waymo, so similar to Tesla, autonomous driving is getting a lot of attention. Waymo paid rides increased to 150,000 per week. That's pretty unbelievable. I may need to take a trip down to San Francisco and try it out. That's going to be the closest city for me to try it. And then also Waymo this week secured $5.5 billion in funding to expand autonomous vehicle technology. So you're seeing they can snap their fingers and get $5.5 billion for a small little sprinkle on top of the cake here. Waymo is just a sprinkle on top of the Google cake, and they can just snap their fingers and say, hey, give us $5 billion to help us out. We'll give you some shares, share on the upside, and we'll see if we can make this thing work. So there's demand out there for some of these small projects that Google has, and Waymo is operating at a nice clip here with 150,000 rides per week. So some of the negatives, they are increasing their CapEx. It looks like 13 billion here in additional capital expenditures. That's going to be for your infrastructure. So that is up 62% year over year. And as we've seen with all these big tech companies, this is why you are long NVIDIA, because all these big tech companies are going to keep spending and spending. So that spending is not slowing down. As a matter of fact, it is accelerating 62% year over year. So they're saying that this could pressure margins in the future, but as we've seen, these companies are getting a very good return on their investment when it comes to what they're spending. They're becoming more efficient. They're having more avenues for services, and they're also creating new products and services. So I think over the long run, this stuff is going to work out. We will see who fails, who spins and fails, but it looks like right now I'm seeing all these companies spend and it's working out for them. At least their share price is continuing to go up, and even their spend is paying off, at least in the share price going up. People are anticipating a greater future. We will see what pans out at the end of all of this. So I think this is the big one here, the antitrust scrutiny. It's really going to be interesting to see how this all shakes out. What was very good to see in this quarter was the search still just beast. So this is last year. No, this is the current quarter right here. So we've got some more graphics that we'll end on here, but search is still 50 billion this last quarter in search. It's just crazy. So you see the cloud growth. We had a dip there in 2022 and 2023, and now we are starting to reaccelerate. And again, we're growing at larger numbers, which is phenomenal. So 30% year over year for probably about $40-50 billion a year in Google Cloud revenue. So if that continues to grow at even 30%, that's going to be phenomenal. Wow. This is a great chart to see here. So this is the Google Cloud revenue. Look at that. That's just outstanding consistency. So we're starting to get some real operating income versus a bunch of losses here in 2021, 22. 2023 is when they turn the corner, and looks like there's no looking back here. We've got the ads revenue. So Netflix is still larger than YouTube, but Netflix is a much, much larger business than just YouTube. So YouTube is holding its own with a giant like Netflix when it comes to ads. And I think that trend will most likely continue unless Netflix hits another growth spurt, which they may do. Streaming here, I don't think this is new. I think this is an older chart. We've talked about this before. But you've got YouTube down on the bottom, Netflix on top of it, and then all the others here on top. So it's really, you've got the two big dogs that are taking most of the share here when it comes to streaming. That's YouTube and Netflix. Again, we all know Netflix, the behemoth. And I don't know about you guys. I know about you guys because you wouldn't be watching this without YouTube, but I use YouTube for a couple hours a day. And then here we go, another search revenue share by company. Google just killing it. Amazon, again, we'll get Amazon tomorrow. I'm super excited to see what they have to say for this quarter. Other than that, it's Microsoft, Yelp, and Yahoo. Amazon is not a search engine, but it's a store. So they get a lot of advertisements for people searching their store. Google is just a search engine, and it crushes the competitors, as you will see right here. We've talked about this. This is mobile. So Google is 95 share of mobile, and this is why they are coming after them in the DOJ. So we will see what happens with that lawsuit, but in the meantime, Google's a phenomenal, wonderful business. I've said this to many people over the last couple quarters. I think Google has this overhang on it when it comes to the DOJ, but every time they report earnings, everyone is remembered. They remember, hey, it smacks you in the face. This is a great business, super profitable, cash cow, and they've got just a lot of market share when it comes to some of their big businesses like YouTube and like search. And then they have other pieces of the businesses like cloud, like Waymo, that are going to be other big growers for them in the future. So they've got their established cash cows, but they also have some nice growth parts to their company as well. So it's a very nice balance between the two, and they can take all the cash from those cash cows and feed it into their growth sectors of their business, like AI, like Waymo, like cloud, and they can take losses for a little bit, and then eventually when those companies get big enough, then they'll be cash cows themselves down the road, just like YouTube was. So every quarter, they just continue to blow me away. And again, this was the full year last year. So you had 300 billion in revenue and around 73 billion in net profit. So maybe this year we get 100 billion in net profit, which would be phenomenal. So that is really all I got for this video. We will look at Amazon this week, and maybe I will do a video on the other big tech. We've got Microsoft, Meta, and Apple coming out this week as well. I will do a video on Coinbase, so if you're interested in any of those companies, stay tuned. Those will be coming at the latest this weekend. So Google, I give it an A quarter, not an A plus, but definitely an A. And we will have to wait to see what is going on with the antitrust. I have about a third of the position that I still need to add to Google, but I'm going to be patient. I don't buy on big green days. I will buy on the next big down day when it comes to some FUD with the antitrust. So until then, I am doing nothing, just sitting tight. And when I start buying again, I will let you know. Until then, have a great rest of your day, and peace out.